Hello again, everyone. This is Greg Donaldson. Today, I would like to speak to you and introduce the idea that we talk about from time to time, and that idea is bond-like stocks. And this will be a multiple part series because we maybe do as many as a half a dozen blogs on bond-like stocks. And the reason, of course, is that we believe that companies that fit our bond-like stock criteria are much safer than the regular stock market or the average stock, and indeed have qualities about them that make them resemble a bond. And as you know, there's sort of a mad rush into bonds today. So if we could find stocks that resembled bonds, then we might be able to find stocks that would serve us pretty well over the next few years. Here's kind of the long story short. As I say, we'll embellish on this many times and give you more specifics and charts and graphs and the like, but I just wanted to give you kind of an overall view. I want to go back to Procter & Gamble, and as you remember, our model said that it was undervalued by close to 20% based on the next 12 months. But I want to look at Procter & Gamble now as a bond-like stock. Procter & Gamble is a AA rated company in the consumer staples area. They sell what we call essential services. They sell products that you use every day: toothpaste, beauty supplies, household cleaning supplies like Tide. They also own in the beauty area oil of Olay. But they're a company that has taken on all competitors, and they have become a dominant force almost in every corner of the world. Indeed, 65% of their sales now come from outside the United States, and they are growing very rapidly in India and China, and to a lesser extent in Brazil. So they're a AA rated company, and they have raised their dividend, I believe it's for 56 years in a row. They've paid a dividend since the late 1890s. So this is a bona fide company that has been able to go through the good times and the bad and continue to raise their dividend. Indeed, last year they raised their dividend almost 10%, and as you know, last year was not a great year for dividends. So Procter & Gamble, AA rated company, serving the world, serving the daily needs of their customers, and we consider them to be one of the safest companies that exists. There are companies that are rated AAA, but we think Procter & Gamble ranks right up there in the top dozen safest companies in the world. Now here is where it takes on some bond-like qualities. At this moment, a 10-year U.S. Treasury yields just a little bit under 3%. So let's just say, for the sake of discussion, 3%. Right this minute, Procter & Gamble has a current dividend yield of 3.2%. So it yields slightly more than a U.S. Treasury. Now, the thing we know, though, about Procter & Gamble's dividend policy is, so long as they continue to prosper, they'll continue to pay out a dividend, and not only will they pay a dividend, they will raise it. Their history is the best evidence that we have that is what the future would look like. Over the last 20 years, their dividend has grown at over 11% per year, meaning that it has tripled about every 10 years. Let's say, for the sake of discussion, that the dividend grows at only a little over 7% for the next 10 years. Now remember, we're comparing this against a U.S. Treasury bond. If that is the case, the current dividend, and let's say we buy $1,000 of Procter & Gamble versus $1,000 U.S. Treasury bond. Currently then, we on a $1,000 investment in Procter & Gamble, we would get about $32 a year. On the U.S. Treasury bond, we would get about $30 a year. So we're getting a little bit more now on Procter & Gamble, but here is where it gets very interesting. If the dividend grows at 7.2% to be exact, it will double in 10 years. That means that the dividend will go from $32 per $1,000 investment to $64 for a $1,000 investment. And if you do the math, you'll realize that the current dividend yield in 10 years, if it does grow at a little over 7%, would be 6.4%. Now, we also know that the U.S. Treasury is not going to change. It's a bond, it's a fixed income security, so it's going to yield 3%, and it's going to give you $30 a year, and it's going to continue to give you that until it matures. But Procter & Gamble, which is a very high quality company serving a broad range of the world's humanity, that has shown a history of raising their dividends, they have the opportunity to double the income of a U.S. Treasury over the next 10 years. Now, here is sort of a bottom line, and I'll stop. The highest dividend yield that Procter & Gamble has had in the last 20 years is right now. 3.2% is the highest dividend yield it's ever had. Now, there is a possibility that if they raise their dividend every year for the next 10 years, the stock could be completely flat, not move an inch. And if it did, your average rate of return from the dividend alone would be somewhere around 5% versus a 3% for a Treasury. Now, the Treasury is guaranteed by the U.S. government. The dividend is not guaranteed, but you have 50 some odd years of evidence that Procter & Gamble has gone through all kinds of markets and economies, and they have shown a generosity when they have prospered. In my mind, it is hard to imagine that if their dividend does grow at 7%, that stock won't also grow in the range of 7% a year. And so the bottom line is that you would be making from the very beginning 3.2% on a dividend yield, and the price and the dividend would be growing at about 7 and a fraction. And so it's possible that Procter & Gamble could provide as much as a 10% annual rate of return over the next 10 years at a time when the U.S. Treasury bond is going to yield 3%. We know that. If you buy one today, you're going to get 3% for the next 10 years. There's something out of whack here, and we don't think that the market is pricing Procter & Gamble right. We explained a little bit last time why, and this is more evidence. But we'll talk more about these bond-like stocks. There are many of them. Here's the first one, and this is just a thumbnail presentation of how it works, but it gives you a good idea so that we can talk about it in more detail later. Thanks so much. Talk to you soon.